Hey, everybody, welcome to today's episode of the What Worked For You show. Today, we're going to talk with a real estate veteran of 23 years, but he's not just any real estate veteran. He's had the privilege of working in a company that scaled from a smaller brokerage up to a company that not only had 3.9 billion, almost 4 billion in sales, that's billion with a B. If you know about real estate brokerages, that's a lot of money for a brokerage to sell, but they also got the company sold for a 9-figure exit, which is phenomenal in the real estate brokerage space. So tremendously successful in that area. He was a president of that company, worked closely with a name that if you're in our market, you'll know when we get there. But also he has since then started a company that raises capital for multifamily investments. So he also spends a lot of money. Well, he does spend a lot of money, but also a lot of time in that space. But he is a father of 3, a musician, someone who's done multiple marathons. So I don't know where he finds time to do all this, but I'm looking forward to learning more. John Makarewicz, did I get it right? Was I close?
That's right, Frank. It was close enough. John
Close
Makarewicz.
enough. Okay. As I was saying, it's one of the harder last names. I need to practice this one more. So, but no, thank you for being on the show. I appreciate it.
My pleasure, Frank. Yeah, I'm looking forward to it.
Awesome. Well, let's dive in. Let's start with that company, which for those of my local listeners, it's the March Spain Real Estate Group. If you know anything about Atlanta, you've probably seen that name on a billboard somewhere. You helped scale that brokerage from millions to billions, which is like huge in that space. What was some of the key decisions that were made along the way that made that kind of growth possible? Because that's the stuff people envy in that space.
Yeah, absolutely. I think number one is we had a sort of unique take on the brokerage model itself. So we're not the only ones to have done this, right? Just to be very clear. But what was happening is, Gary Keller, who started Keller Williams Real Estate, wrote this book, The Millionaire Real Estate Agent. I believe it was in like the early 90s. In fact, when I first got in the business in '02, I closed a deal with a Keller Williams agent and they gifted me a copy of this book. It was actually a recruiting technique. They would give this book to, agents that they thought would be a good fit for Keller Williams. I was very happy where I was at the time. But all that to say, I read it. And basically what Gary outlines is this way that through focusing on lead generation and understanding that leads are the lifeblood of really any business, but certainly the real estate business, that if you can build a good machine to capture leads, eventually we get to a point where there's too much work for you to do, right? You just can't simply service all those leads. So you start building a team. So what we did was we were a team model. Now, originally when I started, it was 9 people. So it was Mark. He was still going on some appointments, but he had hired a handful of listing agents. I was hired to be one of them. He had 1 buyer agent and a few administrators. And, at the time I was, in my mid 20s and I was just looking for leads. In fact, it was '08 when I joined up with him originally. I'd spent a few years working for another smaller in-town Atlanta real estate group, a guy that I name is Zach Pazmanik, who some of the Atlanta listeners may be familiar with. Incredible guy, had been in the business since the '70s, so taught me a lot. But when the Great Recession hit, my income got cut in half. So I had to look for opportunity. And you'd mentioned those billboards, Frank. And actually, that's why I called Mark, because I'm thinking to myself, if in '08 this guy still has billboards up, things must be working for him. And we ended up getting it off. But it was in that model that we were able to create a lot of what we were able to accomplish. And because of that, how it works is we were generating all of the leads. And this didn't happen immediately. This was like 10 years later, but we realized building out a sales team that's only job was to nurture and convert those leads into appointments. That was a critical step, because what we learned is what makes an agent really good at sitting in the living room and winning over the business isn't the same skill set as sitting on front of the computer with the phone dialing for dollars for 4 or 5 hours a day. Kind of different skill sets. So that was number one. Number two was we really got clear on the leadership team and the people. So we spent a lot of time building out the team. And I can dive into this a little further later if you're interested, but a multi-step interview process, spending a lot of time identifying the right people. So those were the two key decisions. I think Mark having this vision of this real estate team, why are we limiting ourselves to one market? We can expand and grow this into other markets. That was number one. And two is getting really clear on the right people, getting the right people on the right seats on the bus, so to speak. So those were the two key things that really led to our growth, with a lot of detail in the middle, right? But those were really the two key factors that drove our success.
Let's talk about each of those briefly, because those are both topics that, certainly in the world of business are questions we have to answer. But in particular, at least in my experience in real estate, they're not giving enough weight to the seriousness of them and the importance of getting them right. And so the first one you were talking about, opening up to different markets, which, effectively scaling. And in my experience, real estate is a business that it's too easy to scale too soon. To the point where if you get online and you get on Instagram or wherever, people make it sound like it's as easy as going to your refrigerator and grabbing a Coke,
Right.
without really understanding the implications of what that really means. And the reality is most people that try to scale struggle with it if they succeed at all. What was some of the key things around this idea of scaling, going into a different market, the planning that went into it to ensure this really, not only that it could work, but that it actually will work?
Yeah. Yeah, one of the things that Mark Spain always talked about was go small to go big. And so by that, really focusing on one or two key things and doing it really, really, really well. And so because the brokerage was effectively handling all the lead generation and lead conversion, that allowed us to put a lot of pressure, so to speak, on the agents to provide the best level of client experience, right? And so things like multiple surveys throughout the process. And, candidly, one of the things that I think differentiated us is those surveys came straight to me. Now, the sales director that agent reported to received it, the agent received it as well. But me as the president and eventually president and CEO was keeping an eye on that. So it communicated to the team how important that aspect of what we do is, right? Because your reputation is everything. It's like Warren Buffett said, it can take 30 years to create a great reputation and 30 seconds to destroy it, right? So, we're not perfect and sometimes we got it wrong. But, when that bad review came in, I'm the first person to see it. And I'm the one responding saying, what are we going to do to fix this? How can we resolve this issue for this client? And we're, surveying them at the date they sign the paperwork, the date the listing goes live, 30 days in, right? At closing. So we're really getting a holistic overview of that client experience and identifying, maybe areas of the transaction that could be smoother, right? Maybe there's too many touch points, too many people reaching out. That's one thing we discovered because we had this great admin team, but the sellers are like, who do I call? Do I call my agent or do I call this admin or do I call this person, right? So we really use that information. But you talk about scaling and you're right. You see so many Instagram videos and it's like, they make it seem like, to your point, it's just like getting a can of Coke out of the fridge. We started talking about expanding into new markets in 2014. We didn't launch our first expansion markets until 2018. That's how long we thought about it, how long we really analyzed our process and our systems and tried to get those right before we took that giant leap. And, once we took that leap, it was a bumpy year. Let's just put it that way. That 2018, those first couple of markets, I mean, things were going well, but there was a lot of lessons learned, right? We had the wrong person in the role of expansion director. We learned that. And that helped us figure out the kind of person we needed for that role. But, the good news is the thing that we were actually most scared about was, well, we have no name recognition. Will our marketing work? That worked immediately. So it was actually a little bit of curse of abundance. We were getting inundated with leads, but the agents weren't trained up effectively, right? So that was a big aha moment. We really need to work on our training protocols because in Atlanta, they come into the office and we train them, but now we've got people in other states. How does a trainer travel to that market, or do we develop an online training protocol? Leveraging learning management systems, et cetera. So, I think that's the key, is that go slower than you might think and really make sure that you have created that, quote unquote, better mousetrap before you expand, and then be very, very, very hands-on during that expansion process. I mean, I was in those markets on a monthly basis, if not biweekly, just talking with the agents, talking with the directors, going on appointments if necessary to learn and improve. So, yeah, it's funny. I think there's so much cool stuff out there on social media today. I mean, YouTube is a treasure trove of learning and knowledge. But it does seem like sometimes people skip some of those steps, right? They're just like, oh, do this and then go do that. And it's like, no, it's a very thoughtful, long process. And one thing I think a skill set any leader needs to learn is to be very open to feedback from team members personally and throughout the organization, and to be okay with a good plan. That good plan today is better than a perfect plan tomorrow, but be very vigilant in watching the numbers, watching the metrics, and watching what's happening on the ground. I was blessed to work with an executive coach early on in my career, and he taught me the concept of lead by walking around, right? Just go talk to the team, get as close to the ground as possible. And so I would say that's actually something that I learned to really love, going into an office and spending the day just talking with the agents, talking with the admin team, learning about them personally, right? As a big part of that, right? Like what makes them tick. And then being able to then leverage that to go back and say, okay, this office has a culture that's unique. And so we need to kind of maybe update our training protocols to meet these folks where they're at. But yeah, that's a big part of it. I'm a very impatient person by nature, Frank. So I've learned to really slow down and take my time. I'm fast at decision making. I'm fast to make a pivot if something's not working. But when it comes to something major, because by the way, when we went into a new market, the way we viewed it, it was like taking $1 million and lighting it on fire, because that was the kind of money we had to be prepared to lose in year one, before we started getting profitable. Right. And so, if you don't have the stomach for that, maybe it's time to slow things down a little bit. Right. And make sure you have the systems in place before you make that decision.
No, absolutely. One of the business mentors I've heard, he says, get it right small
Yeah.
before you stale. Because if it's not right small and you stale it, now you're just going to have big problems.
Yeah. Yeah.
And I'll vouch for it. I've lived that, so I have personal experience with this idea. So,
Yeah. Yeah.
no, absolutely. Getting it right small makes all the difference. And then you you stated that when you started to expand, you discovered you had the wrong person in the seat,
Yes.
and that pivot had to be made. Again, kind of like Stalin, you always hear people in real estate talk about, well, I need an assistant, I need help, I need a virtual assistant, I need that. Everyone's always talking about having people help without understanding, but you're now going to be responsible for someone. You got to manage them, and we're not even can they do the job? Are they the right person for the seat? They ain't even thought about, I now have to manage somebody. And I think with people, in particular virtual assistants, people have almost made it, again, seem like it's as easy as doing the refrigerator. Oh yeah, you just go get a VA and this, that. At the end of the day, getting the right person is a difficult task, in my opinion.
Yes.
What was that process like for you guys to pick the right people for the right seats as you were growing that company?
Yeah. Yeah. So what happened is initially we made the mistake that I think a lot of sales organizations make, in that you take your best salesperson and you promote them to a manager, right? And we did that a number of times, and occasionally it worked, but more often than not, it didn't. And so, it was very frustrating, right? Because that turnover, right? That, quote unquote, cost of a bad hire. Now, I don't like the term bad hire, because it seems to imply maybe they were a bad person, but it was really a job mismatch, right? So it was the person with skills, but we were asking them to do things that weren't actually natural to their behavioral style. And so going back to Gary Keller, he had actually told a story in his book, and Mark Spain had developed a relationship with him. We were the top team within that organization before we went out and started our own brokerage. So he had a couple different mastermind groups with those top folks. And he told a story about himself where he tried to expand and it failed initially. And he hired an executive coach, and the coach said, well, guess what? The reason you failed, Gary, is you're the wrong person to expand this. You're a demanding perfectionist, and you're trying to go out and hire people pleasers and, sales managers that are magnetic and can draw people in. And you guys are just butting heads. So what you need to do is actually go find somebody who could do that for you. Go be that people person. And so the advice, and I think if I remember the story correctly, he's like, you need to go hire 3 people. And he did, Mark Willis, Mary Tennant, and I think Mo, I can't remember her last name. It's been a few years since I thought about it. But by doing that, they kind of had to shut down those initial expansion offices. But a few years later, they went back out. And a few years later, they were one of the biggest brokerages in the United States. So what we did was we just took a page from his playbook and hired that exact same consulting firm that he had gone through that process with. And so what they taught us was this multi-step interview process where, it starts with a really compelling job description, but effectively this job description in a way is meant to scare away, the wrong behavioral style. The person, it's like, this is what you're going to have to do on a day-to-day basis. And it's not all sunshine and rainbows, right? There's going to be some tough tasks along the way. If this sounds interesting to you, reach out. So that's number one. And then what we would do is a quick screening interview. And how I would generally handle those is I would sometimes set them up at not necessarily odd hours like 9 p.m., but just like kind of at different times of the day. And what I was looking for, because it would always be a phone call, because I wanted to see, would this person still treat this like an interview, even though it was scheduled in as a phone call? So occasionally the person would be driving down the highway. I mean, I could just tell, right? You could hear the sound of the wind in the background or whatever, or one time the guy was literally at his son's t-ball practice. And I'm going, okay, so they're not really taking this seriously. So in that process, in that screening interview, sometimes those clues emerge. But what we would really do is just walk through our culture, what it's all about to work for us, what we expect. And what you'll find is that the right people will be attracted to that culture you're outlining, right? Like we're demanding, we set big goals, but guess what? We also love people. We like to have fun, but we expect you to hit your numbers, right? And so that screening interview was meant in effect to also scare away the people that, maybe weren't the right fit for that culture. And then from there, we would transition into a more robust, comprehensive interview, 2 hours, a lot of role specific questions, no open-ended questions, right? Spent a lot of time developing those questions. And then if that went well, we would do a behavioral assessment. And the reason we would do that behavioral assessment is we would actually do a reverse behavioral assessment for the role itself, where we would say, this is what the role looks like. These are the behavioral attributes. These are the tasks. And these are the things that, are going to be happening on a day-to-day basis. And so that would actually reverse engineer an ideal behavioral profile. So that comprehensive interview, I'm going through and I'm verifying. So I'm like, okay, this person should be the right fit. They're answering the questions in such a way. And then we would do that behavioral assessment. And the goal was to find that match, right? So right person, right job. And if all that went well, then of course we check references and then we would do a final commitment interview. But what's interesting is just by having all those steps, some people would opt out because they almost get like mad about it. They're like, I've already had 2 interviews. Why are you asking for a third? Right. And it's like, well, if you can handle the adversity of a couple step interview process, how are you going to handle the adversity of an upset client or an agent who is no longer performing, right? And so it wasn't 100% perfect, but it really helped. And then another thing that occurred to us is we realized within the real estate brokerage industry, the typical traditional brokerage is radically different than our company, right? So in other words, a traditional brokerage is really making their income through having a high agent count. They collect desk fees on a monthly basis and a percentage of commission earned. Where in our world, we were really more of a corporate sales company, right? We're generating leads, converting those leads. So we were almost in a sense looking for account managers. So what we realized is that we shouldn't be hiring managers. Now, it's not to say 100%, but we started looking in other industries like new home construction. Heck, some of our people were working at Delta before coming to work for us, or the Home Depot or Verizon. And so we really just looked for the right kind of talent that could work well within our environment. So that was a little outside the box thinking of saying, we don't necessarily need somebody who knows residential real estate forwards and backwards. I can get you to go get your license and I can show you all our systems and processes. But if I find the right person who knows how to work in this type of culture and this type of business, that's once again more of a corporate sales environment, it'll work. So this was like a multi-year process of bumping our, toes and, making mistakes. But we really ended up with a critical, leadership team that many of them are still there to this day, So I would say this: slow to hire, and I hate to say it so bluntly, but fast to fire, right? If somebody's not the fit, make the decision. I've often found that people will sometimes even reach out after and thank me to say, you know what, I really wasn't happy, and you were right, right? Um, so it's never an easy thing having to make those decisions, but slow to hire, fast to fire was also one of our philosophies.
No, that's the truth right there. Slow to hire, fast to fire.
Yep.
So true. So true. Love it. No, that's a great word there. I appreciate you sharing that. Just this idea around personnel has been, it's a challenging, and it's been people speak. It's interesting though, with social media. Now you have AI. It's some of these key human factors
Mm,
and these key decisions that we as people ultimately need to make. They're almost spoken to as if it's commoditized knowledge.
right.
But if it really was commoditized, everyone would have the perfect job. Every entrepreneur would be perfect, like life. Everyone would be blessed. We'd all be in heaven, except we're not.
That's right.
So yeah, I think it's important that people hear these things. You got then into, you started Ferris Capital Partners
Mm-hmm.
in the multifamily space. So what exactly are you doing with that? I know you're out there. I mean, are you buying the property? Are you doing syndications? Is it primarily raising capital for like? Tell us a little more about that.
Yeah, absolutely. So when I made the decision to leave Mark Spain Real Estate after the company sold, Mark Ferris was actually a friend of mine. He had a very similar business in Canada. So it was a residential real estate team. They had the distinction of being the top team in Canada. We were the top team in the US. So that's how we originally connected. It's kind of a funny story in that I walked into my office one day and there was this just giant gift basket and it had all these Canadian like delicacies like maple syrup and candies and just all this Canadian stuff. And I was like, sent me this. And I read this note card and it says, "Hey, I'm Mark Ferris. We're the top team in Canada, and I've been watching you from afar. Would love to connect." And so when somebody does a gesture like that, right, it's just hard not to like call them, and say, "Gosh, thanks for sending this gift over." He'd actually gotten this idea from a book called Giftology, right? So strategic gift giving to build relationships and to build business opportunity. So what ended up happening is we just developed a monthly cadence where we would hop on a call and just talk through what was going on with our businesses, what was going well, what were our challenges. And so when I'd shared with him, I had left Mark Spain Real Estate. A couple of days later, I got a text message. "Hey, I got an idea I wanted to run past you." So what he had observed, so he's from Canada originally, now living in Naples, Florida. And over the years, he had amassed a pretty large portfolio of real estate in Canada. But, just like the US, Canadian real estate prices have skyrocketed. In addition to that, there's a lot more regulation. So things like rent caps. So, for example, in Ontario, you can only raise rents 2.5% a year, no matter what's going on in the market. And so effectively, he found that you could not find cash flowing real estate deals in Ontario anymore, maybe in some of the other provinces, but if he's like, if I'm having this struggle, surely other investors are as well. So that was the idea for Ferris Capital Partners. So once he shared with me the idea, we spent a couple of months talking through it. I just left this opportunity and, I planned to actually take a year off, but right away within a couple of weeks, we're having these conversations. And number one, I'm like, I like Mark a lot. We've spent 4 years getting to know each other. I know how he thinks. I know his business morals and ethics, and I knew there was alignment there. And most importantly, when he talked about this idea of buying apartment buildings, we talked more about the residents than we necessarily talked about the investors. And that really stood out because customer service was once again one of the differentiating factors, in my opinion, at Mark Spain Real Estate. And so what we decided to do was join forces. And so what we look for are 80s, 90s, and early 2000s apartment buildings that are largely in original condition, maybe ideally mismanaged or undermanaged, if you will. So maybe they have bad reviews. We like that because we think we can go in and fix it. But then what we'll do is we go out and raise capital from investors to acquire these assets. Of course, Mark and I personally invest as well. And then once we acquire the asset, we immediately do an exterior facelift, refresh all the amenities, install guarantees for our residents to enhance the resident experience. So if you're unhappy in the first 30 days, you can move out, no questions asked. If you have a major life event, your job gets downsized, or maybe somebody in the family gets sick and you need to move to help, we'll let you out of the lease as long as you can document it. And then third, we're going to make any maintenance repair within 24 hours, or unless we have to order a part, or we owe you a $50 gift card. And then what we do is in that first 30 days and every basically month thereafter, we target 3 or 4 unit renovations. So when somebody moves out, we renovate that to today's modern standards, raise the rents because now we made a more attractive unit. And then over a 3 to 5 year period, we drive up the NOI through these strategic renovations and management that we implement. And the goal is to double our investors' equity within that 5 year period. So we got started in 23. We've acquired 5 assets, and we have one set to close around August 6th. So I don't know when this will air, but in the coming weeks. And then another one under contract set to close in September of 2025. Actively looking for our next one. So our goal is to serve 10,000 residents over the next 10 years. And that's how we think. And then we reverse engineer that and, okay, well, how many deals do we need to buy per year? And then how many investors do we need to serve? So that's how we've designed Ferris Capital Partners.
Love it. Love it. So I got a question on that. But before we get into that, I want to back up for a moment. And that is, you started in real estate 23 years ago. And my understanding, I think you'd mentioned that was right out of college.
It was. That's right.
So is that where did you go to school for real estate, or did you go to school for one thing and said, forget it, I'm going to do real estate? And if so, why real estate? Like, how did all this go down?
Yeah. I would say one thing about me that a lot of people find surprising is I don't think like too far into the future. Right. So in other words, I never, my wife and I were actually just talking because we're coming up. We just had our 21st wedding anniversary and we were on vacation, and it was just a nice moment. She was just like, I really love the life we've, created. And so it prompted the question. I was like, well, before we met, what did you envision, your life to look like? And it was funny because she's like, well, I just thought I wouldn't have kids and I'd be the cool aunt and I'd travel around the world. And, I said, well, we're traveling a lot. So I guess we've checked that box, but we have 3 kids. So, I guess what I've learned, and I share that story, is that it never looks like you think it's going to look like, right? So not to say I just go with the flow, but what ended up happening is when I got out of college, I had some friends in real estate and they were doing well in it. And he literally said, you should come work for this guy, Zach Pasmanic. It's a lot of fun and I'm making good money. And so I said to myself, maybe I'll just do this for a little while until I figure out what I really want to do. And here I am 23 years later, still in real estate. So, that was kind of never my intention, never my vision. I was never, in high school or middle school saying one day I'll sell real estate. I mean, it never even occurred to me, but, I saw an opportunity and it ended up working out. And then what I realized pretty quickly, even at, 22, 23, when I was first selling, is, I'll just say it, some real estate agents have a bad reputation that's earned. There's some fantastic agents out there, but there's a lot of part-timers or people that don't take it as seriously as it is. I mean, the way I viewed it is I'm helping somebody sell more than likely their number one financial asset. And if you look at studies, selling a home is right up there with, the top 5 life stressors like sickness, death, divorce. And so once I really understood that and I realized that, often what separates a good experience from a great experience is just like 5% more effort, right? It's like sending a handwritten note at strategic times, following up after phone conversations with a recap, just simply doing what you say you're going to do within the time you said you were going to do it. And I'm just wired that way. If I fall asleep and like, I'll wake up at 1 a.m. and go, oh, I forgot to send that email, and I'll send that email, I don't know. It just, I can't turn that off in my brain. So maybe that's just something that thankfully was wired within me, but I found a lot of early success with it. And I just, more importantly, love doing it. And I think for me, once I really realized that, my dad would sometimes ask, well, when are you going to do that other thing? Or when are you going to go, get that other job? And I just said, I love what I'm doing. And, gosh, if you can find something you love to do, it doesn't really feel like work. Right. And so I think that was what kept me in the business. I just enjoyed it, the stressful times, the deals that are about to fall apart and you solve that problem. I just got so much joy from that. And sitting at the closing table and, folks that were stressed out. I mean, gosh, during the Great Recession, Frank, I was helping people with short sales, very stressful.
Yeah.
9-month process, people at risk of losing their home. and seeing them crying at the appointment because of all the pain they're in, and then seeing them crying at the closing because they're no longer in pain. Like their crying went from, sorrow to happiness in that process. It's just hard not to get a lift from that. So that's really where it came from. It just was totally by accident, but I ended up finding passion for it.
What was one? So you found this passion, you're helping people. What was one of the most memorable first wins you had that
You know,
really made you think, hey, this isn't just something that's fun, but this is something that I can use as a foundation to grow?
Yeah, it was really the short sale era. So once I left Zach and joined up with Mark Spain, what happened was the first few appointments I went on, people kept telling me, well, I owe this. And I'm going, well, your home's worth this. And, so we just were referring them out because we didn't know how to do short sales. They were so new. And so Mark one day came to me and he goes, John, I'm noticing that we're sending these referrals out and now we're getting referral fee checks coming in 6 months later. So if these people can figure it out, surely we can. So we sought out some education. There were some certifications, early on, some companies had created to learn more about the short sale process. So once I got into that, that's really when I think the passion absolutely ignited because, helping people buy and sell during a great market, there is some joy that comes from that. But sometimes it just feels transactional. You needed help, I helped you. Great. Everybody's happy, but it didn't necessarily bring me like a fulfillment. But once again, what I learned is, gosh, during the Great Recession, I would say I can count on one hand the amount of people that I looked at. I never would say it to them, but I would say, you kind of did this to yourself. In other words, they had, BMWs parked in the garage of their $150,000 home in South Atlanta, and I'm going, you probably took on a little more debt than you should have, and you maybe made some bad, not that they're bad people, but majority, I mean, and I did probably a few hundred, 500, 600 short sales in this period of time, were just good, hardworking people, dual income, and one spouse lost their job. And that's all it took to unravel their whole world. And so when I was sitting in these living rooms and seeing these people going through this pain, and then offering them a solution that was certainly better than foreclosure. It's not to say there wasn't some negative ramifications of a short sale, but a lot better than a foreclosure, and getting those referrals. And so one of my first short sales, I mean, I still talk to those people to this day. I mean, I get like birthday text messages and things like that from, I mean, it's almost like 15 years later. And so helping people in that very difficult time from '08 to 2012, that to me was one of the most, once again, very difficult. And these people were going through hard problems, but it really helped, frankly, develop more empathy in me, Frank, because I'm not naturally empathetic. I'm kind of a low emotion guy. I don't require a lot of pats on the back or, just it's how I'm wired. And so that was actually huge help for my leadership because when I was really fully into leadership, because I was sort of part in leadership during this era, but also still selling, I had gotten some 360 feedback early on in that moment where people would say, you're a 5 on this, 5 on that. But when it came to like the interpersonal relationship, I was getting like 1s and 2s. And it like really hurt me. Like my feelings were hurt. But I internalized it and I really thought about it. And I said, I do sometimes just walk down the hall without meaning to embark an order or say, I need you to do this without just stopping and asking about their day or what's going on in their life. And so that short sale era really helped, develop those people skills that then became what helped me in leadership later on. So I would say that era was, once again, challenging, but one of my favorite times of my life, really, selling, just helping people in those difficult times.
Mm, mm. Yeah, no, that's real stuff there. I love it. One thing I learned is preparing for this was you also love to read.
Yes.
You're an avid reader. Now, there's a lot of books. It's never been easier to write a book, and now the concern is what, right? Like, did they really write the book, or did
Yeah.
AI write the book, right? Like,
Yeah.
you get into all of that.
Oh, yeah.
Without going down that rabbit hole, there's a lot of good books out there. And then there's those standout books that really make an impact.
Mm-hmm.
You're reading over 40 books a year, which is a lot, right? By any standard, that's a lot. How do you determine, you know what, I think this is going to be a standout?
Yeah, it's such a good question. So a lot of it is referrals. So I've aligned myself with people like my business partner, Mark Ferris is a big reader. Mark Spain was a big reader. So, they might pick up a book and recommend it. Friends that I network with. But for me, I generally don't read the stuff that's hot off the presses. My view is I want to see if in 5 years are people still talking about this book, right? And
Mm,
so
mm,
that's one thing. So, I went back to the classics originally, How to Win Friends and Influence People, written in the 30s, Good to Great by Jim Collins, the Zig Ziglar material. This was kind of earlier on in my career, which eventually led me to John Wooden. And so his book, John Wooden on leadership, is one of my absolute favorite leadership books. In fact,
mm.
my view is that if you actually go read that, if you haven't read it before, you'll realize how much of modern leadership books are just, whether they know it or not, are peeling that information in, right? How he builds teams. And, of course, probably John Wooden is the most winningest coach in NCAA history. And it's such a cool thing, because he would say on day one of practice, they would spend the entire day on just how to put your shoes and socks on the right way. Now, of course, this was in an era where there was no elastic in the socks and they were wearing like Converse, right? So not today's, modern era of like, scientists developing the perfect sock and shoe. And so he said, sometimes the players would be really annoyed and frustrated. But his view is, look, if your sock's not on right, you're going to get a blister in the middle of the game and you're going to cost us the game. Or if your shoe comes untied in the middle of the game, you might, lose, possession of the ball. And, all of a sudden we're, in a losing position. And so what he was really talking about is getting the small details right. And so that's just one of a million examples of that book. And then, I do read for pleasure. And so one thing I'm working on is I'm actually going through all the Pulitzer Prize winners, for, the Pulitzer Prize fiction winners. So, people ask me about that a lot because a lot of my business friends or, people I mastermind with, they don't read a lot of fiction. But what I found is a really well written fiction book is really about the characters, right? And so learning about different people's experiences. I would say, look, I was born a white guy in America in a middle class family. So I have a vastly, different experience than maybe, say, a Native American who was born on a reservation, right? So learning about these different experiences that people are going through. And if you don't know, Pulitzer typically awards to books about the American experience. There's a few odd examples where maybe it's not, but I would say 98% of them. So for me, learning about all these different types of people, learning about characters, what makes people tick has been another thing that has added a lot of value to my leadership. So one of my favorite books of all time is Lonesome Dove by Larry McMurtry. It's a Western novel, right? But there's just so much little nuggets of wisdom in there that he interjects, and the characters and just how people, the pain they're going through and these relationships and the challenges. And so that's another big part of my leadership development, believe it or not, is just reading really well-crafted fiction. And it goes back to my rule of thumb is I don't read anything that came out in the same year, right? It's just like, I want to make sure it stands the test of time. And so that's where I had this idea, and it came about because I realized in college and in high school, I had read like 15 of them. So, kind of like Old Man in the Sea and, Grapes of Wrath. And so as I realized that, I said, well, gosh, those books were all amazing. So I'm sure these others might be as well. So I'm about halfway through. I've got about like 48 more to go or something like that. So I'm working through those. But, and candidly, sometimes I read the beach page turners too, just for fun, just the thrillers or all that. But usually for me, just to sum it up, it's through referrals, right? So I have a friend who works for a startup, and he recommended this guy, Peter Zion, who wrote this really interesting book called The End of the World is Just the Beginning, talking about how demographics are shifting so dramatically around the world. Populations are starting to collapse in certain areas like Russia and China, and how that's going to impact, kind of the future of the world. So that kind of information, right? So it could be leadership, it could be sociology, it could be economic books, but a lot of times it just comes from referrals.
I love it. I really like that advice though. See if it's still popular in 5 years or
Yeah, that's right.
good reviews. That's good. That's good. I like that because there's a lot of people recommending books, but if someone's recommending you a book that's already stood the test of time, yeah, that's definitely
Yeah, that's right. I mean, How to Win
That's
Friends and
attractive.
Influence
I
People,
like
if I'm not mistaken, I think it was written in like the 1920s, and it's still just as relevant
that.
today as the day it was written, right? And so that to me is like, that's the kind of book I want to read, not I don't know, the newest, latest, and greatest thing. And you said it. I mean, there's so many books now. And look, some of them are absolutely, I mean, I can spot it. I think we all are pretty good at spotting Chat GBT, right? And so I will say a lot of credit to my business partner. He's writing a book right now. And I mean, he's writing that book. And I mean, he's been working on it for a year and a half. He carves out a few hours every morning, starts at like 6 a.m. And, he sent me the drafts. I'm reading through it, just giving, what little advice I can along the way. But it's a very challenging process. And, one thing I've learned too, this is actually a stat. So the average bestseller is 240 pages. So what I found sometimes with some of the newer books that come out, they have really great ideas or concepts, but it was almost like somebody took a podcast and then just padded it to make it 240 pages of written material, right? So they keep saying the same things, but in different ways. So that's why that test
Yeah.
of time philosophy works for me, where, in 5 years, are people still bringing this book up as a must read, and then I'll maybe take a
Yeah.
look, right? Yeah.
Well, we know you're an avid reader because you know how many pages are in the average bestseller. I said, that is the true sign of a reader right there.
Yeah, yeah, yeah,
I
yeah.
love it. So let me ask you, this idea of, the authenticity, the Chat GPT, but I want to talk about it in the world of multifamily and
Sure.
go back to that for a minute. I have a friend, and I've actually met a number of people with this sentiment. It literally just came up like a week ago. He posts on social media. It's a friend of mine. He's international. He's like, you know what? I'm not putting any more money in multifamily syndications. And he was a very skilled guy. Like he wasn't like a newbie.
Mm,
Like he was like he understood the game, but yet the operator didn't perform. And
mhm.
it wasn't for lack of, he's like, they worked hard, they did everything, it all looked good. He wasn't bashing the operator. They just didn't deliver. It just didn't go as expected.
Mm.
I've heard this story numerous times over the years where the operators didn't deliver the investment to the people invested, or the returns, I should say, to the people that invested in this syndication.
Mm-hmm.
How do you deal with that, knowing that it's not like it's an exception. It's happened a lot of times. In
Of
fact, when the
course.
interest rates went up, all of a sudden there was capital calls
Yeah.
because instead of getting returns, now they're like, wait, you got to invest more money just to keep the thing
Right.
because they invested in these, which I still never understood, investing in arms when interest rates were 3%. I never got that, but we're not
Yeah.
here to be critical. But
Right.
the reality is people did it, regardless of what we think, people did it. And it created these crazy situations. Now that you're in multifamily, you mentioned you got into a couple years ago with Ferris Capital Partners. What is the process? Like, what are you leaning on from your experience to make sure you're not another story, that you do deliver
Yeah.
for those investors?
No, it's a great question, because the I mentioned earlier this like long kind of dating process that Mark and I had, as he, from when he originally presented the idea to when I agreed. I mean, we went to a conference together, we had numerous conversations, but I wasn't interested in a situation where we're just trying to buy a building and jack up rents. Like, to me, it had to be, how do we make the resident experience better, and how do we make like better living conditions? But that was number one. Number two is like my reputation, was super important to me. And so the idea of raising capital from somebody and losing that investment, like, would make me sick to my stomach. Now, I'm not saying everybody, I mean, I would imagine most people would have that feeling, right? But I was really worried about that. And I was very candid with Mark that, like, if you expect me, in the first year to be like raising a lot of capital from my friends and family, don't be, because like, I want to make sure we get this right before I bring any, buddy from my world into it. It's frankly why when I first got into the business, I worked for a team, because like, I just wanted somebody to give me leads. I didn't want to be hustling my friends and family for business. I'm kind of a private individual, and I'm more of the type that, has sort of like an inch wide of relationship, but a mile deep, versus a mile, or an inch deep and a mile wide. So very small kind of world. And so that was really important to me. And number three, like I'm putting my capital in alongside, our investors on these deals. So like if I'm going to put my capital in, it better work, right? So what we had the benefit of when we started was we had the benefit of seeing what other operators had done during 2018 to 21 to 22 that led to a lot of the pain you're describing investors are going through. I mean, you just nailed on one of them. Why would you take floating rate debt in a 2 or 3% interest rate environment? But so many operators did. And guess what happened? Interest rates tripled, and now the capital calls start coming through. So for us, we actually sat down on day one. So I started on April 4th, 2024. We toured an asset that market invested in. And then we sat in a conference room the rest of the day and just worked on our mission, our vision, our values, all those things. But what we also did was we developed our golden rules. So number one, we only buy a deal with fixed rate debt, no matter what. Number two, we always have 10% contingency over and above our CapEx budget, as well as 6 months of principal and interest in reserve for a rainy day. And then number three, we only buy deals that cash flow on day one. So those rules we set in stone, and we have not deviated from those rules, nor will we ever. Now, that's not to say that's going to, ironclad protect every deal we do. From there, we focus on areas that have super strong economic indicators. So population growth, of course. We look for areas where the rent to income ratio is, after we renovate these units, is at or less than 30%. And so we very conservatively underwrite. And then, like, for example, we invest in Charleston, Metro Atlanta, Tampa. All of these markets have very diverse economies. They're not just driven by one or two key industries. They have a large segment of different industries. So, if you look at Charleston, for example, a little bit of tourism, but defense, technology, development, construction, sales. There's Volvo has manufacturing there, Amazon distribution hubs. So when we find those pockets, those submarkets that have that economic diversity, strong population growth, and then we look at the forecasted construction, right? I think that's another issue a lot of operators did, is rents were going up in some cases 6 to 8% a month, or a year organically. And they just thought that would never end. But what they didn't pay attention to was the 1,200 units that were going to come online in 2021 that started construction in 2019 or whatever. And so we've seen that. I mean, we have investors that have shared with us that literally down to, a half a mile down the road, 400 units got built. And that was not in the pro forma. That was not in the slide pitch deck, right? That those units were coming. And so for investors, we tell all of our investors, like, don't take our word for it. Do your own research. We provide them with resources, but, make sure that you're doing your own due diligence before you invest, and not just trusting what the operator says is another key factor. But those three golden rules really help protect us, because by having those strong reserves, by always getting fixed rate debt, and by having cash flow on day one, it limits our opportunities, Frank. I mean, we have to typically look at 300 deals to get one that will fit our model. So it's a disciplined approach that I think has really helped us. And then on top of that, the first thing Mark and I did was we went out and hired a bunch of people smarter than us. So our asset manager has 20 plus years experience in multifamily. Our acquisition director has closed over $1.2 billion in transactions in multifamily. So we built a strong team of people around us. We brought in a CPA as our director of finance. So each deal, it has to get past all five of us. So, myself, Mark, the asset manager, the acquisition guy, and our director of finance all have to agree, or we don't do it. And so I think those are some of the ways we help to try to protect our investors. Conservative underwriting and those three golden rules I mentioned.
Conservative underwriting, something that far too often we learn about the hard way.
Right.
And I remember when I was early in my career, I would always be like, I just don't understand why these people don't think it's a good deal. And now I feel like I'm on the other side where
Yeah.
I'm like, why don't they understand that it's clearly not a good deal?
Yeah. Yeah.
And that comes through some challenging lessons that we certainly learn. But when you said two things in there that struck me. One's not a cash flow day one.
Mm-hmm.
Which, when we really look at the true net numbers, accounting for all the variables, that in itself rules out the vast majority of deals. Snap of a finger. Single
That's right.
multifamily doesn't matter. but 1 in 300, like, in single family, we say 1 in 100, but 1 in 300,
Yeah,
it's almost like, oh my gosh, you ever going to buy anything? But really, it is that discipline that really makes the difference
it is.
between a good and it's hard to do. How did you develop that skill? Because that's a tough one for a lot of investors.
Yeah, I think it just goes back to just personally knowing that it goes back to, like, I guess I have a very strong sense of ego, maybe I'll put it that way, where like I couldn't sleep at night if I knew I was losing investors money, because I'll say it candidly, because of how it reflects on me, that I made this
Sure.
mistake, that I screwed that thing up. One of the things, my dad, he grew up in abject poverty. I mean, his dad was an alcoholic. His mom had died when he was young. He was bounced around from aunt and uncle, all over the United States. But went to Vietnam, came back, got his college degree, and retired as the CEO of a Fortune 500 company. But along the way, like, I just, it was very cool as I was raised, because like when there was, like, business associates, say, over for dinner, like they let me and my sister be a part of that and just kind of listen and observe. And I would, go to his office and, walk around the plant. And so, for example, it was an aluminum manufacturing company. And my dad was like, I can't be driving around in a BMW and then pull up to the plant and ask these guys not to unionize, right? So just very conservative with his money, very conservative with his approach, but also big on his reputation, right? And so, I will say he passed 9 years ago, actually today, July 28th. And so I was talking with my wife a little bit over the weekend, and just all those things I learned from him. And, one thing that really stood out is we did a celebration of life. And after I gave my eulogy, a lot of his friends and some family had given talks, and then I gave the final eulogy. I couldn't sit down for 2 hours because so many people were coming over and telling me stories. For example, their company was bought by private equity, and he had to go in and fire guys that he had hired 20 years ago, right? And they were coming up to me and saying, the way your dad handled that. And, one particular case, they had just transferred him to Denver, Colorado, his whole family, 6 months, and now he's being fired. He's like, your dad actually got me my next job. Like, he went out and figured it out for me. He just took care of that.
Mm,
And so it was just like these little things that I learned through observation and through direct conversations with my dad. It's just like, you always do the right thing, and if you do the wrong thing, even if accidentally, you fix it, you make it right, no matter what. You own your mistakes, you own your wins, you own your losses. And so a lot of that, I've been very fortunate to have that, background, really great parents that, taught me a lot of those life lessons. And so that's where a lot of it comes from. It's just that kind of idea is like, I've always got to do it the right way. And if we make a mistake, I will say early on, Mark raised some capital as a co-general partner, and it is not going as well. And so, with that, Mark's already shared with me that, like, he's going to figure it out for his investors no matter what, so we'll figure that out when the time comes. If it comes, things are looking better now, but it's just that idea, like, we're always going to do the right thing. So I think that's where that discipline comes from. And then because we have people with so much experience, they've seen it all, I mean, even though they're awesome, they worked for other operators maybe that weren't so great in the past. And so they've seen what happens when you go, no big deal. We'll just, forget about that metric this time, or yeah, that's in our buy box, but we'll do the 60s vintage just this one time, and then the plumbing system fails, right? And so we've heard those horror stories. So it's actually one of the first things Mark and I did with George and Joe, Georgia being our asset manager, Joe our acquisition director, is we actually, like, asked them to go through all their best deals and their worst deals, and, like, tell us what they learned from them, what went wrong, why did it go wrong, and if they fixed it, how did they fix it. And so we spent a few hours just on a call, just talking through those things and going, okay, we'll never do that. We'll never do this. Right.
yeah.
So I think that's a big part of it. I think going back, like, to the reading, for me, it's about being a lifelong learner, never assuming my cup is full. It's like my cup is always half full. There's more room to pour in, right? I can always get a little bit better every day.
Love it. Love it. No, no, and that's, yeah, and this idea of owning your mistakes and fixing them, fixing mistakes, and this is just my experience, the hardest thing I've ever had to do.
Yeah. Yeah. Yeah.
It's hard, and some things you can fix quick, and some things just take time, and it's to develop the mindset to deal with that.
Yeah. Going back to
Easily,
books. Yeah.
yeah, it's easily one of the hardest things I've ever had to do, and you never like master it.
Yeah, no, 100%. A really great book I read, Extreme Ownership by Jocko Willenick. He was a Navy SEAL. And, he talks about this idea that if a mission fails, it's the commander's fault for not communicating enough information down to the team, but it's also the team's fault for not clarifying and getting that additional information, right? So
Right.
it's this idea we win and lose together as a team. So, for example, after we close a deal, we always do an after action review, right? It's just like what went well, what could have gone better, what mistakes did we made? Is there anything we can improve upon? Surveying your investors, surveying your residents. I touched on that earlier with Mark Spain Real Estate. But my view is companies that don't ask for feedback already know the answer, if you know what I mean, right? They know it's not going to be good, so they just don't ask, right? And so being comfortable getting a negative review from time to time, right? And that idea of extreme ownership, it's just, as the leader, buck has to stop with somebody, right? And that person's me. Now I'm going to take that ownership, and I expect the other team members to take their piece of it as well. But early on in my real estate career, it's a small story, but I had a deal under contract and it was set to close in a week. And I get a phone call from the seller saying they had a little water intrusion, but they were going to go ahead and get the hardwoods replaced. Like they already had it lined up, going to get taken care of. Now I had a responsibility to disclose that issue to the buyer, but because the seller said, I'm just going to get it done, got it fixed, it's no problem. So I just didn't make that phone call. Well, guess what? The day of closing, the buyers walked through, and because, the sun over time slightly changes the color of those floors, they noticed the difference, and it almost killed the deal. And my seller was furious with me. And it was really more of like, it just slipped my mind. I was like, oh, they're resolving it. No big deal. And I was like, my first year in real estate, but I was so thankful it happened because it just stuck with me, like over disclose, make sure everybody knows exactly what's going on, no matter what's happening. And, don't just bring a problem, say, hey, this happened. This is what we're doing about it. We've got all the invoices. We're going to get everything over to you. We'll let you know when the buyer can come through and inspect. So they'll have a few days prior to closing to make sure it's to their satisfaction. But I learned that lesson early on that, just always over disclose, communicate more than you think you need to. Right. And I guess I would say nobody gets in trouble for over communicating. They generally get in trouble for under communicating. So that was a big lesson I learned to help avoid some of those mistakes in the future.
No, that's a good word right there. Good word. Let me ask you two more things.
Sure.
First thing is you mentioned and it was an interesting story you touched on. Private equity buys company, person moves, 6 months later they're being let go. Private equity, different world from private owner.
Yeah.
And we've heard those stories before if you've been in the private equity space a little bit. And I've met a number of colleagues who play in that space. And so I've heard those types of stories. And when the Mark Spain group was selling, you were in the middle of that.
Yeah, sure.
What was it like? And I mean, it can be a long conversation, so hyper short.
Yeah.
But if you could summarize that experience of what was it like seeing the company be sold to private equity? Because a lot of entrepreneurs that now, you get on Instagram, and I'm not trying to pick on Instagram, go build a company, sell it to private, like again, it's almost becoming like it's easy. It's not.
Yeah. No.
Not at all. If you could summarize that experience.
Yeah, it was a very interesting process. So we actually started the preparations just prior to 2020, and then of course the pandemic hit. So we put things on pause. Now we ended up having a good year. Things recovered more quickly, and all the states we operated in tend to have looser lockdown requirements. So we restarted the process, and so the investment bankers we work with, they kind of had three approaches. One is they just go to a couple key private equity groups that they think would be a fit. Two was, you go to like 100 private equity groups and narrow it down. And then three was like an auction. And they recommended the second option for us. So they sent it out to about 100 key groups, and that narrowed down to 12. So we actually had full day locked in a conference room meeting with all 12 of those groups, in some cases for a second and third meeting. And so what was fascinating is some came in and you could tell had not even read the deal deck. It was like the questions were so elementary and basic. So that was interesting. Some came in very adversarial and wanted to like poke holes in everything. And then some came in very open-minded. And what ended up happening is the group we ended up going with had the best questions. Like they were very thoughtful questions. They had obviously analyzed the deal deck. They really understood the business. And so that stood out in our mind. Now we had to go through this whole process, but it was interesting. I even saw a difference between the firms from New York, the firms from Chicago, the firms from LA. They just, those cultural differences that we sometimes experience. To me, the United States is really like a bunch of different countries in a lot of ways, right? It's almost like Europe, the European Union. The difference between Georgia and New York can be quite different, right? The people who live
For
here and how
sure.
we behave in our culture. And so we felt a little bit of that. But it was a lot of meetings and then basically dinners, right? You go out to dinner, you break bread, you get to know each other a little bit on the personal level. And so we ended up with 3 final bids, and we went with the group we went with primarily because they were the ones with the best questions. They were actually proposing ideas in the meeting that theoretically we could have just taken back and implemented. So it was a very mutual, like beneficial conversation. And at the end of the day, we just liked them and we felt like we could work with them. And this is the big key factor here. This particular group was not attaching any debt to the purchase. So sometimes you sell your company to private equity. Well, what's really happening is they're borrowing to buy the company. And then now all of a sudden that company is saddled with that debt. And so you find yourself in a situation where now you've got to support these debt payments and keep growing at the same time. So the whole idea of just selling to private equity is going to be this great situation may not be the case. I mean, of course, there's the bad situations you hear about where they kind of come in, raid the company of everything that's valuable, and then leave behind the debt for everybody else to clean up. I'm not saying that's all private equity, but that is a version of private equity that's out there, right? They buy these big conglomerates, break them up into pieces. And so this group was coming in with all cash, and it felt like it was really, truly going to be a partnership. And thankfully that kind of proved out during like our first board meeting and every board meeting thereafter. It was ideas working together. Now, if our numbers weren't right, they were going to let us know about it, to be clear. So it wasn't all, roses and sunshine, but it felt very much like a partnership. So if you're thinking about this process, go very slow, develop those relationships, and really ask yourself, can I work with these people for 5, 7 more years? Can I report to these people? Because that's a hard decision for an entrepreneur to make, to all of a sudden they have a boss again when you sell to private equity. Depending on how it's structured, generally they want you to hang around for a little while, right? And with that, now all of a sudden you have a boss. So make sure that you like that person and that you think that they're culturally aligned with your mission and your vision of what the company is.
Yeah, yeah. If you're going to be a rollover
Yeah,
founder, yeah, very important.
that's right.
Definitely
Very
very,
important.
very important.
That's
No,
right.
it's a good word, good word. Last question. Obviously selling to private equity, huge success. Starting multifamily, buying a number of assets in a relatively short amount of time. A lot of momentum. Had a lot of successes prior to all of this. First as an agent, and then becoming a team lead, eventually the president of a company that sells to private equity. So, in the middle of all those successes, what's the biggest mistake you made that propelled you forward the most?
So yeah, interesting. So early on, this was right during the short sale era. A lot of private equity firms, going back to private equity firms, started getting into the single family rental business. And so a few of those companies started knocking on our door. And what ended up happening is one of the companies actually offered Mark Spain a job. So he went to go work for this company to help them scale up their operations. So I took over all day-to-day operations. And at that time, I was still relatively fresh to leadership, but particularly like running the whole shop. I'd have my segmented business, but now I'm running everything. And I made the mistake of assuming everybody was like me. In other words, like you're going to get what you done when you say you're going to get it done, and you're going to ask for help if you need it. And we had an incredible leader who was overseeing this department. And I would go down there once a day. Hey, do you need any help? Do you need any help? But I wasn't inspecting what I expected, right? You hear that term a lot. And so Mark actually called me into his office randomly one day. He came into the office and he said, John, like, we're 100+ deals behind in the investor department, and you've completely missed that. Like, we're going to eliminate your role. And I mean, I was so caught off guard. I was like, let's talk. So we ended up talking for 2 hours, and effectively I talked my way back into the job. And I said, give me 2 weeks. I'm going to get this back on track. He owned that there were some things he could have done to better prepare me for the role. Like there were certain things I didn't have access to, like the financials and certain metrics. And so it was at the end of it all, it was a very productive conversation, but the pressure was on. And so that really propelled me forward because I realized like I have to mind everything, right? It's not so much micromanaging, but you have to understand everything that's going on in your business. You have to be checking in a more meaningful way with your leader, not just knocking on the door on the way out going, anything I can help with? It's having like same page meetings on a regular cadence where you're going through what they're working on and making sure they're hitting their metrics. And so by layering in like those kind of meeting cadences that were missing before, daily morning huddles, weekly same page meetings, department meetings, in an effective way. We're not big on just meetings to have meetings, but that experience of almost losing my job really propelled my leadership forward in a major way because it kind of woke me up. I realized what true leadership is. It's not just sitting back and telling people what to do. It's leading from the front and more importantly, going in behind and making sure that people are delivering on what they're saying they're going to deliver on. I think it's interesting. A lot of times people seem to today mistake management for micromanagement. They think, oh, you make your team report on their metrics every day in a meeting. Like, well, yeah, but it's group accountability. Like it's fun in a way. Like we don't punish people on the call if they miss their number. I might call them after and say, hey, you missed for 2 days in a row. Is everything okay? How can I help? But that group accountability, it actually creates more cohesive cultures and people are more like apt to reach out to help each other. So that was a big moment for me because I realized I really needed to hone my skills. So I got an executive coach. I started reading a lot of books about management, the Patrick Lencioni stuff, the 5 dysfunctions of a team and a lot of those books. And I really got intentional about my leadership versus just assuming everybody was going to do what they needed to do. So that was a big wake up call, but really propelled my career and leadership forward.
I love it. Yeah, daily accountability. That'll change the world.
That's right. Yeah.
So, so when you were talking about that, you're making everyone report their numbers every day, and I'm like, oh, I love it.
That's right.
But most people don't, and I understand why, right?
Yep.
So but no, it does make a difference. I love it, love it. Well, John, I want to thank you for coming on today. We could certainly talk for a long time, I can
Yeah.
tell. However, we do got to wrap up. So I want to thank you again for coming on to share. I mean, just some great insights. So I appreciate it. And to our listeners, if you want to connect with John, we'll have links on how to connect with him below. If you're interested in investing in multifamily, I mean, give him a call, but have that conversation. That might be something that's a fit. And to learn maybe about private equity, because that is, instead of just hearing about it through various online sources, talk to someone that lived it, did it, and it's a different perspective. So, John, I want to thank you again for coming on the show today. Again, super insightful. Can you leave us with a final word?
Yeah, just wake up every day and try to make today a little bit better than the day before.
Easy.
That's easy, right? Just a little bit better, And I'll tell you where I got that from. Cormac McCarthy is one of my favorite authors. He's only given one interview to Oprah, and she asked him, how do you write so well? And he says, every day I just try to write one page better than the page I wrote the day before. And, this guy's written, some of the greatest books in the English language. So I just really love the simplicity of that. So just a little bit better every single day,
Just a little better. I love it. Wonderful. Well, John, thank you again for being on and look forward to continuing the conversation.
Yeah, my pleasure, Frank.